When we correct, I think it's going to be much bigger than 10%. I think that when we finally correct and this market does break down or start to sell off, I think you're looking at 20 to 25 plus. Again, I don't know when it's going to happen. And, I don't know how anybody can say it'll be the third quarter of this quarter. I don't know how that's going to happen. But I do know, and I've watched markets for 40 years, and I've seen this movie before. And when it ends, it's going to end fairly poorly. But, investors have to remember that the markets on average for 150 years have gone up 8%. So there'd be no reason to panic from an investing standpoint. But basically, there's going to be some heavy dues to pay here. We've got way too much debt. You've got people harping on the Fed to cut rates when supposedly the economy is strong. Now, as you know, I've told you before, I believe we're in the very early stages of recession. And with Friday's jobs number coming out, that may start to convince others that I'm correct, and we'll see. But in the meantime, the markets will continue to grind higher under dull circumstances. And when they start to correct, we'll get a run, and we won't stop at 10. I think we'll go 20 plus.
Wow. Okay. What's the catalyst going to be for that then, Todd?
It's always hard to say what the catalyst is going to be, but it will probably be something that, first of all, was unexpected. Now, like, for example, they continue to tell us how strong the banks are and that they keep passing these stress tests. I would question that myself because I know, from certain sources that they're buying a lot of loans. Okay, I know that a lot of these loans are not very good paper, and I don't think that they really have the ultimate asset to back up what they're lending out. However, they do have the Fed backing them up. But that would create, I think, a little bit of shock. We've built so much debt between credit card, between educational debt and other things that eventually the ship's got to give a little bit. And besides the fact that a 20% sell-off, even though it's considered a bear market and everybody be wringing their hands in fear, is really not bad for the market. It's kind of healthy once in a while.